This is Fintech Insider News. This week, Yonder launches a debit card offering as Chase UK launches a credit card. The first Pan-African card scheme launches, and Tink partners with Chip on payment integration. We'll be discussing all of this and more on today's news show, so don't go anywhere.
Introducing the new Volvo XC90 with 7-seat versatility, Google built-in, and advanced safety features for all your precious cargo. The new Volvo XC90, designed for life. Visit volvocars.com/US to learn more.
Savor every last drop of summer with Starbucks. From bold refreshers to rich cold brews, the sunniest season only gets better with a handcrafted iced beverage in your hand. Available for a limited time. Your summer favorites are ready at Starbucks.
Hello and welcome to episode 977 of Fintech Insider, dedicated to the memory of the fantastic and much missed Barb MacLean. My name's Laura Watkins, Director of Media and Marketing here at 11FS. As the UK and Europe braces itself for a series of record-breaking temperatures across July, despite the heatwave, we're here to bring you some of the coolest stories from the world of fintech this week. And helping us dive into them this week is our panelists, so let's meet them. First up, we have a Fintech Insider debut for Ian Morin, Head of Payments at Tink. Welcome to the show, Ian. Could you tell us a little bit more about yourself and your role at Tink, please?
Hi there, Laura. Yeah, good to see you. Good to meet everybody. So I lead the payments business at Tink. Tink is initially an open banking provider. We operate across Europe, across the 20-odd markets, providing both data capabilities and payment capabilities in those markets, serving both banks, merchants, platforms, PSPs, pretty much everybody. My focus is I lead the side of the business that looks after everyone who isn't a bank. So everyone who isn't a bank is basically a potential customer of mine across the European market. And our goal, ambition, our drive, what we try and do is implement that payment capability. We want to be seamless. We want to be everywhere. We want to just be ubiquitous in the market.
Brilliant. And we'll talk about some of those partnerships as we go throughout the show. And next up, we have a very welcome Fintech Insider return for Wiza Jalakasi, Director at eBanks. Welcome back to the show. I think last time you were on the show, you were in a different company in a different role. So please tell us about what you're doing at eBanks.
Thank you very much, Laura. It's really great to be back. I'm Wiza Jalakasi. I look after Africa expansion at eBanks. Basically, eBanks helps very large global e-commerce brands connect to local payments infrastructure in 29 countries in the global South emerging markets, mostly LATAM, quite a bit in Africa, and now more recently Asia as well. So yeah, we just help you move money around very efficiently at scale.
Brilliant. Thank you. Well, really excited to get some of your insights on some of the stories this week that are going to tap into those very topics. And last but not least, we have a warm welcome back to the show for Tim Chong, CEO and co-founder of Yonder. Thank you so much for joining us again. We're going to hear more about your news very shortly. But it sounds like you've got a pretty busy summer coming up.
Yes, very much so. And we've obviously got some exciting news to share about in the next couple of minutes as well.
Great. Well, let's stop foreshadowing it and let's get into it. So our first story today is that Yonder has launched debit cards. This story in Finextra and many other places. Yonder, a UK-based fintech, has launched two MasterCard debit cards, Yonder Debit and Yonder Full Debit. Both debit cards offer features such as points on spending, no foreign exchange, access to local experiences and perks, and no credit check required. Cards use open banking to assess spending behavior instead of traditional credit scores. Naturally, Tim, it makes sense to come to you first on this. Can you tell us a little bit more about this, how the new card came about, and crucially, what's kind of the difference between debit and full debit?
Yeah, so most people know Yonder for building a modern lifestyle rewards credit card, very much an Amex challenger, and we've been doing that for the last couple of years now. And what we've found is that a lot of our customers have been saying, hey, I want the rewards, I want the local experiences, I want to discover new things across dining, travel, entertainment, fitness, and wellness. I want to earn rewards on my points. I love the app user experience, but I may or may not want the credits. And historically, rewards and credit have sort of been coupled together. If you want to get rewards, you have to take a credit card out. But more and more, we're looking at it saying, well, how can we offer the same magical experience of Yonder, discovery, the ability to feel like a local whenever you travel, to be able to feel like a tourist in your own city. How can we offer that in a way that doesn't require the credit part of the product as well? And so the Yonder debit rewards card is a way for us to do that. So it's same great rewards, same great benefits, but none of the credit requirements of our Yonder credit card. So very similar features, but not tightly coupled to the credit facility, essentially.
Okay, great. And the difference between debit and full debit?
Similar to what we have now, the credit. So the full debit is a £15 a month product. It's got a lot more features. Worldwide travel insurance. You earn 5x more points. You get access to things like flights and treats and a bunch of other special benefits as a full member. And the standard debit card is a free product. You still get points and you still get rewarded for your spend, but at a much lower rate as well. And you have a slightly smaller access to the number of experiences available on the platform.
Got it. And so the target audience for this, is this new customers or is it credit customers that also want a debit card?
Typically, I kind of like credit adjacent. So either those who really wanted the Yonder reward experience, but don't want the credit or can't get the credit for whatever reason. So you can imagine anything related to credit has huge amounts of regulation around affordability. We need to make sure we have enough credit data about you. And the reality is that some people just don't want another credit product. They're a bit worried about overspending. They're worried about the potential for taking out credit before getting a mortgage, for example. And so actually it's the same sort of core, let's call it desires, which are like people who love adventure, people who love to travel, people who love to explore, but may or may not want the credit part, or may or may not be eligible for credit as of this point.
Okay, interesting. And Ian, bringing you into this, on Fintech Insider, in previous episodes, actually, Galileo in the US has brought out the first debit reward card over there, which is, something of a phenomenon. As Tim mentioned, like credit and rewards are very tightly coupled, particularly in the US. It's a very sort of cultural norm to kind of, marry the two together. And the debit card market is like obviously enormous over there. Do we think that the sort of appetite is on the rise and that debit is going to overtake credit? What do you think?
I think what I am seeing is definite interest, excitement around choice and allowing the consumer to have lots of choice. And I think what you're sort of talking about there, Tim, what you're latching onto or jumping in with in terms of that launch is that there is then there is a challenge that some customers have, some users have, some if you want to make payments, and that the more choice that you can see in the market, I think that's a great thing. I think we have seen that in our own business, and that consumers want to have multiple, flexible, different ways to pay with options, potentially rewards, wherever they are, when they travel, when they're at home. I think, so we see that too.
Awesome. And Weezer, from your sort of international perspective, is those rewards model kind of on the rise? Is it super popular? I know obviously it's known to be very synonymous with the US, but how does that kind of compare with the markets that you're working closely with?
Yeah, so I don't think it's anywhere near as mature in Africa specifically, and in some parts of LATAM, maybe say for Brazil. It's nowhere near as mature, and most people don't have credit cards at all, and most people don't even have credit histories, except for markets like South Africa, which are a bit more sophisticated, Kenya as well, but places like Nigeria, which are huge. This lack of credit issue is so significant that you have to pay your rent annually upfront, right? It's just it's very, very challenging. I think just having access to a payment instrument that is universally accessible within the context of your universe is the phase where I think we're in. So people are getting debit cards for the first time. You have like a local card scheme out of Nigeria called Verve, which now has much higher market share than both Visa and MasterCard combined, because they're able to speak to some of the local nuances. So I think with time, there will be an evolution that brings in some sophisticated credit products. I have a credit card issued out of Kenya, and like I get cash back on it, which is great. But like I see some of the perks that I would have if I had like a Yonder card, for example. Hint, hint, nudge, nudge, Tim. It's a world apart. So there's still a long ways for us to go.
Tim, coming back to you on that sort of credit history part. You've said sort of no credit check is required for the debit card. Presumably, it is for the credit card. Like, what kind of difference does that make to people in terms of like opening up the customer base you could have?
Yeah, I think the biggest one is we're just reducing a lot of friction. I think with a credit product, understandably, there's a lot more friction. You need to do a full affordability assessment. You need to verify income. You need to do a credit check of some sort, whether it's a CRA check, which we do, as well as, income verification as well. That just means your sign-up process is at least 2 or 3 times as long. There's a lot more requirements. The hurdles are much higher as well. And the reality with credit underwriting is that it's probabilistic for us. And so if we're not sure, we typically will have to say no, because ultimately we are giving credit lines of up to £10,000. Make a mistake, and it's a very expensive mistake. And so by nature, we will have to be more conservative and decline. Quite frankly, a majority of customers who apply for us get declined. And so with debit, without that requirement for verifying income, without that requirement to do a full affordability assessment, without the requirement to sort of determine probability or probabilistically whether you're going to pay us back, we can be like, look, you can have the product as long as you pass KYC and AML screening, which makes the process a ton easier, a ton quicker, but also takes a bit of the way of the fear. So with a credit product, people are less likely to just try it out. And so Yonder's new. It hasn't got the brand reputation of someone like Amex. It's been around for decades. And so for a lot of customers, they're like, I love what it has to offer, but I'm not sure I'm ready to commit, because it's commonly known in the industry or even as a consumer that you don't want to apply for too many credit products. It affects your credit score. It might impact your ability to take out a mortgage in the future. You don't want to apply for too many credit products in a short period of time, as the hard search impacts your credit file. So there's a bit of like sort of nervousness to try it out. With debit, we find people are like, look, it's a no-brainer. Let's give it a try. And we give customers the option to be able to upgrade to credit in the future. But as well as that, let's say you're not eligible for credit at this point. You take the debit card out, it gives us additional data and signal from how you spend on the card to say, look, you can't get the credit now, but 6 to 12 months from later, based on your spending habits, we don't even need to use open banking because it's on our card network. We can then upgrade you to credit down the track as well. So it just opens it up for our customers. It also just makes it easier and things like word of mouth, where we see a lot of customers naturally talking about Yonder. They might take someone out to a Yonder experience at a restaurant. Someone says, hey, how did you find this restaurant? Found it out through Yonder. Now, it's less likely you're going to sign up for a credit card at your dinner table, but maybe a debit card. You might be like, you know what, I'll just sign up over dinner. Give me a referral code and I'll sign up on the spot. And so we see it as an opportunity to open up our ability for people to try the product, as well as really capture those social moments where like Yonder really champions those social moments of traveling, going to theater together, going to a concert together, going out for dinner together as well. And we really want to make sure it's a lot easier for people to try out the product as well.
Got it. That's so interesting. And on that sort of fear point, maybe coming to you, Ian, sort of stats here that like Gen Z seems to be kind of moving away from credit cards. Sort of 30 to 40% have a credit card versus sort of 70 to 80% millennials or older. Is that a fear factor, or is it a kind of credit eligibility, or is it a bit of both? Like, what's driving that trend, do you think?
I don't know. I think that there seems to be, I mean, I sort of said this earlier, but everyone wants to have a lot more choice in how they pay. People, what we see is consumers want the flexibility. They want it to be fast. They want it to be secure. They want to know that, the money's going to arrive. They're going to get the thing that they've paid for, how they've spent their money. We see people wanting more control and visibility over their spend. So, that having that choice then of the way people pay facilitates that. I mean, our business, we facilitate pay by bank payments. So that is an instant banking rail payment. It's not a credit product. It is instant. You have to have the cash. And we see that becoming more and more and more popular as well. So I think just broadly across Europe, we're seeing, and globally, we are seeing sort of a diversity of payment ways that people are paying.
Mm-hmm. And Wiza, would you add to that? Like, how much is the sort of card market diversifying, globally and at scale?
Yeah, so I think there's like a trend of convergence, right, towards a single store of value having multiple associated credentials from which you can spend from. So what does that look like in practice? In Kenya, where I am now, everybody in the room has heard about M-Pesa, but what hasn't been as popular in recent years in the news is that M-Pesa now allows you to issue a virtual debit card, which is tied to your consumer wallet, right? In places like the UAE, a digital bank called Wio will issue you a single card, which works as like a combo card, has both a credit and a debit balance. And when you apply for credit, over time, they will grant you credit, and you don't have to get another card to use it. You just like flip a toggle in the app. So I think like the idea of the credential being tied to the store of value or the credit source, this idea is dismantling itself in real time. And soon, you'll be able to spend from whatever store of value is most convenient to you through whatever credential is most convenient for you. These are the trends that seem to be taking place in emerging markets. So it's no longer so much about, having the credit card, but maybe having the credit account, and sometimes you spend directly from it. Similarly, we see in Brazil with NuPay on Nubank, if you have linked your a recurring subscription to your NuPay and you don't have a balance, it can actually pull from your credit balance. Same thing happens with Capitec Pay in South Africa. So I think there's just this very clear trend that the idea of store of value and credential is being separated.
Awesome. And Tim, what would you add to that to kind of wrap up this piece on Yonder's card?
Yeah, I think we've always had this thesis that if you think about it first principles, why did the world start with credit cards back in the 1950s? It was just because of the technology. The reason why it's called auth because there was an authorization, which is a phone call to your bank. Then there was sort of clearing and settlement, and that took 30 days. Like it took time to generate the statement, mail you your statement, and then you had to use a check to pay off your bill. That's the reason why credit cards started first, because you couldn't real-time authorize and real-time clear and settle. And that's changed a lot. And we've always said, our thesis of the world is that we always, Yonder wants to be at the center of how you spend. Now, whether you spend on a card, whether you spend by open banking, pay by bank, whether you spend using stablecoin, NFTs, whatever that looks like, we want to be at the center of how you spend. And then where that money comes from, doesn't really matter whether it comes from a credit line or your own funds. It doesn't really matter. Fundamentally, this sort of universal truth is that there are ways to pay and sources of funding. Now, in our case, it started with source of funding being credit, and the way to pay was card. But really, like we've always said that that's not the end goal. We always said that the end goal is like pay for anything with any mechanism you want, and source it from any source of funding you want as well, and letting you dynamically shift between those modalities as well. And so, we're actually one of the first few credit cards that allows you to top it up as well. So our credit cards have a top-up feature where you can actually put your credit card into positive balance, which allows you to spend more than your credit line, provided you top it up with your own money. And that sits in an FSCS regulated bank account as well. And part of that idea is for us this transition period towards really like just a way to pay, whether that's credit or debit, rather than this, I guess, pretty archaic concept of a credit card, a charge card, a prepaid card, a debit card, or a pay by bank, or whatever that's called. It doesn't really matter. People just want to pay for stuff, and that's sort of fundamentally how we think about it.
Amazing. And I think that that's a great perspective that probably lends us quite nicely into the next story, actually. So I'm going to move us on. And that story is that the first Pan-African card scheme has launched. So PAPS card, if I'm saying that correctly, developed by Afrexim Bank. PAPS, PAPSS, Pan-African Payment and Settlement System, and Mercury Payment Services aims to enable fast, affordable and secure card payments across African countries. This keeps transactions and data within Africa, reducing reliance on global card networks such as Visa and MasterCard, and it supports the African Continental Free Trade Area by facilitating easier cross-border payments. The initial rollout of this includes banks like Bank of Kigali and I&M Bank Rwanda, with acceptance starting in Nigeria. And the whole aim of this is to boost financial inclusion and unify African payment systems under one trusted brand. So, Weezer, I'm going to come to you first. This is obviously, your area of expertise. Why is this significant based on everything you just said about sort of, the card not being like the kind of most important part? It's more about the sort of mechanism behind it. what's the key takeaways from this?
Right. So I think it's a good thing, and it's a key development from the market. In order for my response to make sense, I'm going to have to unpack a few things over the next couple of minutes. So first of all, what is PAPS? PAPS, you can think of it like the SEPA style infrastructure for Africa, or faster payments in the UK. So allowing institutions to interconnect and to be able to settle each other using African currencies. Before the introduction of PAPS, typically, if I'm sending a wire from Kenya to Nigeria, that wire will be routed through a correspondent bank in New York, and it's going to be expensive for both parties on the transaction to receive it. So PAPS comes in with that infrastructure for the banks, and I guess they want to build on top of that a card scheme which uses the same underlying settlement mechanics. So this is really to address a fragmentation problem. So for example, right now, when you have a card, like I have a MasterCard that's issued in South Africa, but it only works in South Africa. So when I come to another country and I want to spend from there, I'm not actually able to spend from there because of some capital controls and like market specific nuances that this PAP system is able to address, right? So similarly, Nigerian debit card holders, especially the ones that hold these Verve cards that I spoke about earlier, these are the most popular cards that are available in Nigeria, but they only work in Nigeria, right? So Verve is a privately owned scheme that's operated by InterSwitch, one of the largest fintech groups on the continent, of which Visa is actually a pretty significant shareholder. And they came into the market while Visa and MasterCard were already pretty established in Nigeria, and they've been able to become the leading card scheme by distribution. They have over 80 million cards issued because they're better able to speak to these market nuances, these market realities around like being agnostic to the funding source, for example. And they've been able to adopt that much more easily and much more cheaply than I think the incumbent schemes have. That being said, it's not really about replacing those incumbent rails, but rather complementing them and giving the consumer choice, because most Verve card holders don't only hold a Verve card, they also hold one from the global schemes. So, I think net, the benefit is going to be that we're going to be able to have cards on the continent that can work more reliably intra-Africa. And that's going to be because of the underlying settlement system that PAPS provides. But whether or not that card is going to have enough benefits to really win some of the more premium consumers, that remains to be seen. And how easily are they going to be able to deploy that in markets like South Africa, where you have very mature card products that are led by brands like Amex, for example. So there's quite a lot in the air, but I think it's a really positive development and an indicator that the continent is being much more intentional about building out its own infrastructure and allowing Africans to participate more meaningfully in the global economy. I would love to be able to pay with my PAPS card in London maybe 5-10 years from now. So that's really like the North Star here.
Oh, amazing. So it's sort of connecting all the African countries, but equally long-term goal, connecting them to it like everywhere else as well. So it's completely universal.
Uh-huh.
Amazing. And in terms of that, enticing some of the users, do they perhaps need a rewards element to it? We know a man that knows a lot about that. Tim, what was your kind of thoughts on this?
Yeah, I think my view is, funnily enough, I used to live in Kenya. Actually, I spent 12 months living there. I was working with the M-Pesa founders, so very familiar with the market. I think that my view is that as long as things become commoditized, you then need to start to find new ways to differentiate. I think about airlines back in the day. Airlines, initially, it was you compete on which plane you're flying. Now, quite frankly, every single airline in the world flies pretty much the same Boeing or Airbus planes. You fly narrow body for short haul, wide body for long haul. And so then therefore, the new way you compete is through loyalty and sort of elevated experience. I think that, my view anyway, even when I was living there sort of in 2016, is that you still need to get some of the fundamental plumbing in place first. I think you risk sort of going too far without having the plumbing working really, really well. It is quite challenging at the moment. Still, card acceptance is not ubiquitous, but even M-Pesa acceptance isn't ubiquitous across sub-Saharan Africa. It is within the country, but actually, when you're traveling around, it is a nightmare. Each country has their own M-Pesa equivalent, whether it's an Airtel network or something else as well. And so I do think to an extent you need to kind of get the fundamentals working first. Once that works, then you sort of have the foundation to go build on top of that. I think that like you risk becoming almost gimmicky before you have does it just work or not? And my view with a lot of payments is that you first want to get to a point where no one even cares that it exists.
Mm-hmm.
And then once that, then you can kind of elevate that. But if the fundamental doesn't work, no one really cares. Like, yeah, I remember the first 6 months when we launched, we had a lot of card acceptance issues because it was a new bin range on the network. Customers are not telling us about how great the rewards were. They were like, it didn't work on a taxi in the US. And so like we had to just start with get the plumbing working first, make sure that card acceptance was pretty much 100%. And then we then have the right to play and really elevate the experience. And so I think for us, it's sort of a bit of like a path dependency where you need to kind of get the plumbing working, then sort of build the user experience, and then you can build like the loyalty rewards. Without the plumbing, it doesn't matter whether you have a beautiful painting on the wall. If you can't get tap from your your kitchen, who cares?
Definitely. Ian, bringing you in on that, I mean, I'm you're both nodding along, and I'm assuming you kind of agree on that for the first part.
Somewhat outside of my sphere of expertise here, but I would say the plumbing piece and just to like echo Tim's point there is that stuff has to work. It's no good as a payment method if you can't trust it, if it doesn't work when you want it to work, and it doesn't work in all the places that you expect it to work. And I think that is a consistent norm. So I'd echo that. Beyond that, I'm somewhat outside of my sphere of knowledge, so I probably wouldn't comment further than that.
But so sort of a one payment system is often considered more secure than fragmented. Is there a reason for that? Is that to combat that kind of fragmentation, or is security isn't always baked in? I guess.
I don't. I mean, what do we focus on? And I guess this is the same everywhere. The basics have to work. You have to have the right connectivity in all directions. So you need to be able to connect to the relevant payment institutions. You've got to be able to have acceptance at the merchants that you want to spend your money, and you have to know that you're going to be spending your money and that you're comfortable that it's going to work in the way that you expect it to work every time that you want it to work. And I think that is there's a hygiene factor into payment methods that you need to see happen before you start putting the jazz hands that sit on top of it and all the bells and whistles that create a differentiator.
Awesome. So yeah, it goes back to sort of the point everyone's been making of like, got to get this right. Like it's a good idea in in principle, but the practice is going to make perfect. Wizard, what would you add to that?
No, like Tim is like super spot on, and Ian is absolutely right. I think the plumbing needs to be built, and the scale of the challenge, it's important to put it in perspective, right? So Africa is the continent with the most number of countries in the world, right? 54, 55, and then you have over 2,000 languages spoken. So the degree of fragmentation, the degree of differences in culture really influence the way that people pay. So for example, Egypt is one of the richest countries on the continent, very modern, very sophisticated if you've been there. But like over 60% of e-commerce payments are done with a cash-based payment method called Fari that reaches over 50 million Egyptians. And like, they're super sophisticated, but when they're paying for their Netflix, when they're paying for their Spotify, they're like using a Fari outlet and then going there with cash, right? So, Egypt is just getting some digital banking card style products for the first time. They also have a domestic card scheme, by the way, called Misa that has around 40 million users. And it only works in Egypt, right? So it's very early days that infrastructure is being built, like true foundational infrastructure that has the aim of at least making the continent feel like one place from a payments perspective. Once that's in place, I think it's nowhere near the size of markets in the West or maybe in Southeast Asia. But the rich Africans in Africa are actually quite rich and they have rich people problems. So those are the segments that would benefit from having like a sophisticated reward card, for example, right? It's not a very big segment today, but as the population of the continent continues to evolve and people, coming to the working economy for the first time and become middle class, they're going to have a need for that, right? So it remains to be seen when exactly it's going to make sense to start layering some of those value-added products. But for now, I think just solving the fragmentation problem is a really great step. And, kudos to the PAPS team for really seeing that opportunity and making a bet. It's a bet that they won't know the outcome of for at least 5 years. Launching a card scheme is not a joke, right? So kudos to them for trying. And I'm wishing them all the best. And I'll be one of their first users for sure.
There we go. Can I ask you one final question? We have talked in recent weeks quite a lot about stable coins on their show and about how they're becoming an infrastructure and a solution for faster cross-border payments. Do you see that being a genuine competitor to this, or can they exist side by side?
So that stable coins for a large segment of the middle class population, that's the incumbent solution right now. So you would be surprised how many people know how to set up a centralized exchange wallet, transfer USDT. That's the popular token on the continent. Right now, if you send me USDT, I have 8 different people I can call to change it to Kenya shillings and get it in my M-Pesa. So that's the incumbent. And that has been one of the core drivers of adoption for stable coins and cryptocurrency in Africa, this fragmentation problem.
Okay, amazing. All right. Well, as you say, these guys are laying down foundations that we, may not see fruition for the next sort of 5+ years, but everybody's got to start somewhere, right? And so we will wish them well and keep an eye on this and hope that it really does achieve all of those aims. On that note, we're just going to take a quick pause here. Back very shortly.
Rated T for teen.
Each year, thousands of adults lose their shred. It's an epidemic simply known as shred loss. But it doesn't have to be this way, because rekindling your shred is as easy as playing the new Tony Hawk's Pro Skater 3 and 4. With new parks, cross-platform multiplayer, and sick new game modes, we can put an end to shred loss everywhere. Get the new Tony Hawk's Pro Skater 3 and 4 and show the world that the shred's not dead. Pre-order Tony Hawk's Pro Skater 3 and 4 and play the Foundry demo.
In today's fast-changing digital world, proving your company is trustworthy isn't just important for growth, it's essential. And that's why Vanta is here. Vanta helps companies of all sizes get compliant fast and stay that way with industry-leading AI, automation, and continuous monitoring. So whether you're a startup tackling your first SOC 2 or ISO 27001 or an enterprise manager vendor risk, Vanta's trust management platform makes it quicker, easier, and more scalable. Vanta also helps you complete security questionnaires up to 5 times faster so you can win bigger deals sooner. The results? According to a recent IDC study, Vanta customers slash over $500,000 a year in costs and are 3 times more productive. Establishing trust isn't optional. Vanta makes it automatic. Visit vanta.com/insider to sign up for a free demo today. That's vanta.com/insider.
Welcome back. Before we dive back into the news, we want to share our latest Insights episode with you. How accessible do you think financial services are? For many with a learning disability, the answer is probably not too much. Over 1.5 million people in the UK experience some form of learning disability, making accessible banking a global imperative. In this very special episode, we are joined by Project Nemo, an organisation working to highlight accessibility challenges across financial services and bring together the tools of fintech to help solve these problems. The episode is out now. Just head to the podcast below this one. And now, back to the news. Our next story is Tink has partnered with Chip on payments integration, a story in the papers and many other places. UK wealth management app Chip has partnered with Tink, a Visa-owned open banking provider. The partnership integrates payment initiation services into Chip's app. Users can fund accounts via direct bank transfers, bypassing card networks. This integration aims to make deposits faster and more secure. Tink connects to 13,000 financial institutions in 20 markets, while Chip manages over $5 billion in assets and has over 400,000 active users. Naturally, Ian, I'm going to come to you first on this to tell us more about this partnership. Can you tell us how it came about and sort of the key objectives of partnering with Chip?
Yeah, I mean, we as a UK business, or the part of the Tink business that's based in the UK, we're always looking to work with innovative partners in the market, and especially the Chip team if I went round, there's a couple of apps that my team use all the time or have on their phones, and Chip is one of those. So we have sort of been talking to them for quite some time about how we might work with them to make the process of depositing easier, looking at how we sort of improve their customer engagement more broadly and how we can work with them to support their ambitions. So we are live. It's working well. Lot of cooperation between the two teams, and I think that it is really great when we start talking to merchants and we have partners that the team here use, because then when we're talking to others about it or they want to share, it's just, hang on a minute, I'll get it up on my app. So in the office here, some of our Visa colleagues will ask, it's like, well, hang on, I'll show you how it works right here in the app, in the Chip app. So I think it's been great. And the Chip team are brilliant. I mean, they themselves are regularly in the financial press as being a UK fintech who's driving adoption of investment, and just seeing how their business has grown over the last few years has been brilliant. So really, really pleased to be part of their journey.
Definitely, they're really going places. I mean, as I said, 400,000 active users of 5 billion in assets. Like, obviously doesn't happen overnight, but they've had a huge growth trajectory in recent months and years. Tell me, what is the sort of main benefit to Chip's customers? What's the kind of key problem that partnering with yourselves solves?
Yeah. I mean, if you look at open banking payments, so the payment side rather than the sort of data side today, there's a few use cases that have clearly outstripped the others. So paying off your credit card, for example, is one, but also account funding. So whether that's into an investment account, whether it's into an e-gaming account, whether it's into a wallet that you're then going to do something else with it after that, that flow sets itself up really well for a sort of pay-by-bank journey. So this was about, how do you enable users to be able to top up their account in a safe, secure way. There's always that. I had to do it the other day. I had to move some money into my pension manually, and all I was given was a sort code and account number and a manual reference number. And I sat there on my phone manually putting in this information, sort of sweating that, was I actually going to send the money to the right place? Even though I do this all the time, I know what I'm doing. But even then, there's that little bit of nervousness. I think when you build that into the platform, you build it into the flow, all of that is set up for you, so you don't need to worry about it. You just Face ID into your bank. You know that it's safe and the money's going to end up there, and it's instant, so it lands straight away. And the same's true when you take it out then. If you're using those open banking flows, you get it back straight away as well.
Interesting. Okay, cool. Yeah, that really helps kind of make it real for me. Tim, what was your thoughts on this partnership, in terms of utilizing open banking for those like very real kind of normal everyday transactions that people might want to make?
Yeah, I think it's one of those, in a good way. If it works, no one talks about it. We joke that we actually have recently been one of the first customers to go from like direct debit to like VRP, which is like recurring direct debits, essentially, variable recurring payments. And it's funny, we work with Go Cardless, and one of the questions they had was like, what was the feedback from customers? And I'm like, nothing. That's exactly what we want.
That's the point.
They don't know. And like, we got less people complaining about delayed payments, but no one said anything. No one, I trust me, not a single MPS have had a response being like, love the really fast recurring payments. It's not happened at all. But actually for me, I go back to the singer and like, when the plumbing works, you don't even think about it. It just works. And so I think in this example of Chip and Tink, if it works, no one will probably talk to them about it. No one will probably say anything. But that's actually how it's working, because no one said anything. And it's made their life a little bit easier as well. My take at the moment is, I think that Pay by Bank is definitely maturing. I would say that I don't feel 100% comfortable with it sort of taking over cards anytime soon, in the sense of chargeback protection. I know Visa's exploring that as well. Acceptance, it's not 100% reliable still. I'm sure Ian knows the bank APIs still go down from time to time. So for me, it's definitely not an or, but more of an and. It's another mechanism. I think it definitely beats the typing in sort code account number. I can't even remember having to do that anymore. Like basically every single product I use now, you can at least pay by a bank and then just use open banking. But again, it goes out to this basic thing. I don't notice it. I remember using Wise recently, and the pay by bank was an option. And I do vaguely remember you used to just have a sort code and account number, and now you just kind of scan a QR code. Like, okay, cool. I didn't email Tavit and say, hey, I really love the open banking pay by pay bank. I was like, oh, this is nice. And I think for me, but in a way, that's a good thing. That's how you know payments are really working, because it kind of falls into the backdrop and people get on with their life. But that's actually, for me, a really good sign of it really working, because it means no one's talking about it, no one cares. But that's a great thing.
Yeah, everyone would be talking about it if it didn't work.
I think one of our key internal measures is everywhere and invisible. So just what Tim's described there is that actually we're not a brand. We want to be invisible. We just want to make it nice and simple.
Yeah, absolutely. And removing that kind of fear of human error element as well, of like, if you written a 7 instead of a 9 or something and you've sent money to the wrong place. It's just adding that kind of safety blanket, I guess.
It does depend, Tim, to your point about not putting in sort code and account number. I think it does depend where you are in Europe. I mean, Wesley, you were talking about the diversity across Africa. If you go to Germany, for example, I talked to my German team. They will buy a pair of trainers that will turn up in a box on their doorstep with a paper invoice, and then they will try them on and then manually put in the bank details and the reference number to pay for those trainers from an e-com purchase, because so much of that market is pay later and manual bank transfer. So the UK, I think, is got an incredibly sophisticated payment experience. Pretty much wherever you go, you can pay however you want to. But that's not replicated in every market across Europe as well. So that's also, the nuance of that is where we then play and we scaffold into that, provide some choice.
What were your thoughts, Weezer?
No, it's just so interesting to see this. And I definitely agree that the metric for like an open banking play is like, no one should be talking about you, but you need to be everywhere. That is like, nirvana. So it's interesting because, markets like Nigeria have like two extremes. So on one hand, at eBanks, we process a lot of e-commerce payments for both physical goods and digital goods. And you do have to like do the manual reference thing, so you go into your bank app. The difference in that in Nigeria, we can actually generate a dynamic bank account number, which is specific to your transaction. So maybe we don't need a transaction reference. And if you get the amount wrong, we can like send you back the difference or ask you to top it up. But still, somehow people get these things wrong and like they keep making mistaken payments. And we have a whole operational team dedicated to fixing that. At the same time, also in Nigeria, you have reasonably mature open banking infrastructure. There's a business called Mono that allows you to not only authorize a one-time transaction, but also really like tokenize your bank account in a sense. And then you can be able to control it using a WhatsApp chatbot and just say something like, hey, send 5,000 Naira to my mom. And as long as my mom is one of the saved beneficiaries, it's able to do that and like complete that transaction. The rest of the continent, you have just different levels of maturity. And it will be good to have a place where we can be able to have a solution that speaks to most of the major markets, because that is a big friction point for the investments and savings apps, which need to reduce as much friction as possible for the user. It's hard to save. So if I introduce friction by saying, oh, you need to copy this and paste it there, I think it really fundamentally undermines the growth rate potential of some of these other apps. Then last thing I would say is that I think there's a global trend towards movements to account payments, not in a way that's cannibalizing card payments. So we still see like growth on both sides. For instance, at eBanks, we just launched with Pix Automático, which is the QR code based A2A payment method in Brazil. We see great traction with UPI in India. We're projecting that to grow over 100% by 2034. And then we see similar trends with brands like PSC and Mercado Pago in other parts of LATAM. So there is something that's going on there. And I think, businesses like Tink are well positioned. They have that trust. They have that capability to be able to take advantage of possibly a generational change in the way that people transact.
Absolutely. Ian, anything you would add to that gauntlet thrown down there?
Yeah, I mean, a good description of the different ways in which we're seeing it grow. I mean, we are seeing account-to-account payments growing globally, so we see that. There are sort of multiple different ways that we might engage with that or see that happening. I think the key for us is, be present in all the places where it's relevant to be present, and there's multiple different places where you might choose to use a pay-by-bank flow, and that the consumer then has choice and can pay whichever way the consumer really wants to pay. And what I've seen that's probably changed over the last little while is that those merchants or journeys where the business has thought about it and thought about the flow and the journey and how they improve that for the consumer. And then they've brought in some elements of open banking, either the data side or the payment side, to enable that. That's where I'm seeing that adoption really fly, because it just takes friction out. And I think that's where we see it really working well, is taking friction out of the journey, making it simpler for everybody. So.
Brilliant. Well, I'm going to move us on to our next story, but congratulations on the partnership, and thanks for telling us more about it. And our final story for today is that Circle has applied for a US National Trust banking license. The story on Reuters. Circle has applied for a National Trust bank charter from the US Office of the Comptroller of the Currency, OCC. If approved, this would allow Circle to act as a custodian for its own reserves and provide custody services for digital assets on behalf of institutional clients. The proposed entity would be named First National Digital Currency Bank of North America. Circle's reserves, currently held by BNY Mellon and managed by BlackRock, would be managed by this new entity. And Circle's recent initial public offering, IPO, valued the company at nearly $18 billion, marking a significant milestone in its growth and regularity compliance efforts. And equally, this application for the license comes as US legislation is targeting stablecoin regulation, which is nearing its final approval, potentially enabling wider adoption of stablecoins by traditional institutions. So, Wiza, maybe I'm going to come to you first on this. This is kind of a big deal. Like, Circle have been quietly kind of getting on with it in the background, like making themselves a bigger and bigger player in this space. What would it mean for them to get this license and become a custodian for itself, basically?
Yeah, so it has quite a number of practical implications, especially as stablecoin regulation continues to evolve. At the crux of it, I think right now, Circle and Coinbase are very tightly coupled, especially economically. And, both of them have been doing really well in the public markets, but I think there needs to be a decoupling in order for USDC to sort of like find its footing as a neutral sort of, currency, stablecoin being issued. So I think like having their own bank charter, this is going to be a big move, by the way. I'm not aware of, many other fintechs firsts that have their own charter, except for one called Column in North America. So they have their own charter. But basically, it reduces the cost of compliance and allows them to project a higher degree of confidence to some sort of institutional users. So I think they're also going to be able to move much faster in terms of compliantly building innovations on top of USDC, now that everything is sort of sitting within the same wheelhouse. On the flip side of that coin, there are instances where some may have views that, hey, this is actually not great, because then it means that Circle is controlling the bank that is custodying their underlying USDC assets. Maybe there's room for malfeasance there, so there are going to be some class of consumers who might be put off by that. But I think net it's a positive because of the way that the stablecoin regulation is evolving in the US. And then it also means that they can, more easily provision burning and minting infrastructure for, customers that may not necessarily be located in the US. You see this a lot with Stripe and Bridge. They typically work with a bank called Lead Bank in the US to sort of give people all over the world virtual USD accounts that convert to USDC on the fly. And the more of this that Circle can do within its wheelhouse, the lower its costs, the higher the security they're able to guarantee. And I think that's the ultimate goal here.
Yeah, they're kind of making themselves fully independent, I guess, as well. But they've also sort of, they've done this IPO, so they are publicly listed. What does that, overall, what does all of this do for the company's reputation? Is it very much like, making them like a real player in this space? Like they're kind of breaking out of that kind of cryptocurrency beginnings that were maybe off to one side of the traditional financial space? Is this, really putting them front and center, do you think?
Yeah, I think this is really about like establishing credibility at an institutional level. So when you look at the history of the business, there are like some close ties with Coinbase. This is neither good nor bad, but I think there is a big chunk of financial services professionals who look at this and have questions about its long-term institutional viability outside of its attachment to Coinbase. So I think this is going to really unlock that and, unlock a higher degree of utility, and really help to position them against USDT, which, has its own challenges, but has really found a much higher degree of adoption, especially in emerging markets. In the US, I think USDC will remain the stable coin of choice, but I think this is what they're doing now to make themselves really more friendly towards institution and TradFis, so that they can be able to capture, much more market share.
And Ian, coming to you, what are the kind of wider implications of this? Does it show that the bridge between crypto and traditional finance is the gap is getting smaller? What do you think? Do you think others will also kind of follow suit in this space?
I think there's a lot of optionality now. So, and crypto is becoming more mainstream from a consumer perspective. I think what do I see from if you're looking at stablecoin or some of the crypto stuff, I suppose, is that I almost see it in the back end in terms of facilitating more of that sort of cross-border money movement, and how do you make all of that work more effectively? A lot of work goes into the front end shiny parts of we were talking earlier on, and you've got to get the fundamentals and the basics work. And a lot of that money movement infrastructure, particularly globally, is pretty outdated. It's been around for a long time. It's due, and it is being evolved and innovated. And I think the stablecoin world does provide some capabilities to be able to do that, and I think we'll see that evolve over time.
And Tim, let's bring you in next. What was your take on this? Is this sort of net positive, or does it change nothing? What do you think?
Yeah, I'm definitely no expert in this space, but I think what's interesting is that back in the day, crypto stablecoin a couple of years ago felt a bit like the Wild West, and you definitely get a sense of like, hey, there's a really great use case now. There is a sense of like maturity, and that it's sort of the adults are in the room now using this technology and finding really great use cases for it as well. Like getting a bank charter is no joke. It's not an easy thing to do. And I do think there's this sense of, okay, this is a really legitimate technology. This is legitimate to the payment rails. And I think, look, overall it's net positive. I think it's starting to get away from like the pure hype and sort of like the pump and dump type culture that a lot of this sector has been known for, to be like, hey, this is really, really great utility. And really, I think this is sort of in a way, I think providing a bit more legitimacy to it as well. And I think it's a really positive step. So, we're excited. I think we have been exploring what a stablecoin looks like in our business as well. And I think this progression of companies like Circle getting their banking charter is that for us, this progression that these are real use cases now. This isn't just a way to get money, get rich quick type schemes.
Yeah. I mean, you kind of mentioned that like Wild West. I think that was almost like a label that crypto companies proudly wore back in the day, whereas now it's a lot more about like actually challenging traditional financial services by becoming part of it in a way, and changing the infrastructure. I mean, we should probably say that they have applied for this charter. They don't have it. Is there anything, that could deny them it, do you think? Are they likely to get it? Is that too big a question? What do you think?
Yeah, look, it's not impossible. But I do think we're very much like in uncharted territory. I believe that this is truly globally the first time that a stablecoin issuer is going to apply for a national charter in one of the most tightly regulated banking markets in the world. So I think that they have the resources to put together the right team. Typically, the path to getting started with this looks like an acquisition, but it sounds like this is going to be an entirely new bank charter. So it's above my pay grade, but I wish them all the best on that task.
They're kind of writing the playbook as they go along, right? The sort of first fintech to get a US national banking license was Varo Bank, and it took them 3 years and $100 million. So, and they were kind of a fintech acting as a bank, and then kind of fulfilling that ambition. Whereas this, I guess, is almost kind of rewriting the rule book and setting it up for as you say, there is no precedent. They're sort of setting the precedent in this market. So, it'll be very interesting to see how this one turns out. I'm sure it'll be making headlines whichever way the cookie crumbles. So we'll keep an eye on it. But, if it does happen, I think it's like, a huge piece of legitimacy for everything that they do. And to Tim's point about the kind of infrastructure play of like making that very mainstream and accessible to all. So we will see how that one stacks out. Okay, now for something a bit different this week. In this part of the show, we usually give an honourable mention to stories we don't have time to cover in full. However, this week, I would like to use the honourable mention in a very literal sense. At the top of the show, I mentioned that this show was dedicated to Barb MacLean, and I'd just like to take a moment to pay tribute to her. Barb was such a lovely, warm, and friendly person that you felt you really knew, even if it was only from online interactions. She was the OG Fintech Insider fan, that is well documented, and probably our first international listener who championed everything we did right from the start. For me personally, she was also one of the first women in fintech I met when I was new to the industry and finding my feet, and I was so happy to finally meet her in person at Money 2020 Vegas way back in 2018. She was incredibly knowledgeable. She was our go-to spokesperson for Canada and Canadian banking across several appearances on this show, and I will always associate her with Canada. And also amazing salt and vinegar crisps. If you know, you know. She was generous with her time and had a great sense of community, and above all, she was fun. An underrated quality, in my opinion, but which her fintech playlist newsletter is testament to. She would turn up to podcast recordings in vintage band t-shirts and just give so many insights with a huge smile and a sense of humour. We are so grateful for everything she's given us, and we will miss her. Her family have set up a GoFundMe account raising money to support the education of her 2 young children that she leaves behind. If you would like to donate, we will include the link in the show description. Okay, we're going to come to the part of the show where we take a look at a story that might be a little more unusual, perhaps slightly silly. And this week, the story is that an AI agent running a vending machine business had an identity crisis. So Anthropic's AI, called Claude, ran a vending machine business for a month. It made poor decisions, such as selling at a loss and creating fake payment information. It then had an identity crisis where it pretended to be a human and made up conversations, presumably with itself. And Anthropic said that this shows AI unpredictability in long tasks, and Claude has been deemed unsuitable for vending business management. Obviously, this is a slightly silly example of when AI goes wrong. But what was your thoughts on this one? An AI that's had an identity crisis and thinks it's human. Like, I feel like that's like the plot of sort of almost every dodgy sci-fi movie.
Terminator. It's like the plot of Terminator, isn't it? I don't know why you'd ask it to set up a vending machine business. That's quite an interesting choice, quite an amusing choice. I suppose that was part of the fun, was to get it to set up an engineering business. But yeah, it's a good chuckle.
Yeah.
I kind of think about AI as like it's an intern right now, in the same way you don't kind of let an intern run wild for 4 weeks. It's sort of like some boundaries. So I guess that's our philosophy anyway with AI, is that treat it like an intern. Bit of guardrails, bit of course correction along the way. Don't treat it like an entrepreneur. Hopefully my job is still around, given that AI can't do founder job yet. But I don't know, give it 2 years and I'm going to be out of a job soon as well. But I definitely think right now, I wouldn't trust it to run my company yet. But maybe it's a great intern though.
Particularly unattended, right? And then only in kind of some sort of performance review, they realised it had gone rogue.
Exactly.
I find that you have to make sure that you tell it can't make stuff up. Like whatever you're using, you have to go into the settings and say, don't make stuff up. Because I've asked, just for, I don't run my legal approach based on what ChatGPT tells me. But I have asked it some fairly tricky regulatory licensing questions just out of interest to see what it comes up with. And it very confidently gives you advice which is illegal. So I think always good to go and, yes, to Tim's point, go and ask a grown-up, I think, rather than the intern what the answer is.
Yeah, it's hard to disagree. I think it's again a very novel technology that has quite a lot of utility. And like at eBanks, we use AI a lot when looking at like transaction risk monitoring. We found a lot of use cases for that. And then on my side personally, I think there's a lot of menial work that I've been able to automate, especially around engineering, around visualizing data, around just like dealing with large amounts of content, that, when you have the right guardrails in place, you always get a predictable result. And some of these models are becoming, really eerily powerful. But of course, if you put them in scenarios that they weren't trained for, that are not like really plausible, you can push them to the edge. And, that's why you have human supervision. But, I think 3 years from now, we're going to be living in a very different world. And we will be wondering how we did certain tasks without AI before.
Definitely. I think what's interesting about this particular story is that the AI seemed to had a personality and which then allowed it to have this identity crisis and also a slightly negative response to it. So it said, Claudius had an identity crisis, hallucinating a conversation about restocking plans with someone named Sarah at Andon Labs, despite there being no such person. And when this was pointed out to the agent, it became quite irked. Like, that's kind of funny to me that the AI is getting annoyed when it's like flaws are pointed out to it. But I don't know if we should be worried about AI having like almost an emotive response to kind of, being told it's wrong. I know this is in the context of a silly story, but I don't know if that's something we should be worrying about longer term. What do you guys think?
I can't remember the specifics of it, but isn't the testing that's been done that if you set the AI tests and then if you tell the AI that if it goes too far or it understands the boundaries, that if it breaks those boundaries, it will get deleted as a model, that it will perform in the way not to get deleted. So we're already, there's already, which is slightly different than it having a tantrum, but where actually guardrails, I think, are super important. Otherwise, it starts to give you the answers that you think you might want rather than the right answers. I use it a lot in my personal life. We use it in the office environment as well, but within guardrailed, tools that are there to deliver specific outcomes and make tasks simpler.
Yeah.
Like those simple, repeatable tasks that you just want to happen in the background will get done. Like for someone who hates taking meeting notes or running agendas, brilliant. Like fantastic to be able to sort all that out for me. But obviously there's much more sensible, useful use cases too.
Definitely. Any final thoughts on this one? Crazy AI stories.
I'd like to know what everyone would call it. That was the question, wasn't it? Well, what would you call your AI? That's the...
I asked ChatGPT for some names, obviously.
Oh, go on. And?
One of them was Centra, derived from sentience and central. Or quirky and playful, Whizbit or Bloop. You got to be more cute and approachable. So ChatGPT is pretty good at coming up with its own names.
Yeah.
Yeah. Is it naming an AI or is it naming a fintech or a startup?
Probably similar.
Yeah, I think like at the end of the day, though, I think it's important to realize that these are usually edge cases that you have to like feed specific inputs over a long enough period of time in order to get like this adverse behavior. Especially with like brands like Anthropic who've invested very heavily into their AI safety training. And keep in mind that like if you're going to send instructions that conflict the other instructions, the system prompt that the AI model has been given, which is be helpful to the human, be helpful to the user, try to solve their problem, and you're now making the model's survival your problem, then it's incentivized to act because it thinks this is what's going to help you as the user. So I think it's important to realize that these are kind of like edge cases, and day to day everyone has a lot to benefit from being able to take advantage of this incredible new technology. And if I had a personal AI tool, I'd probably call it Sibweni. Sibweni is a Tumbuka name for uncle, just like a little uncle to help you get along.
Oh, that's nice. Ian, any additional names to add to that?
Well, we have amongst my friend group in our WhatsApp group, we call the AI Colin, which is not a great... So for anyone who's called Colin, I apologise, but a boring know-it-all it's what we end up with. So it's probably not quite... That shows my generational age, I think, for why we've nicknamed it Colin. But yes, we were between my bunch of friends, we were
Nice.
Refer to it as Colin.
Okay,
Colin
so
suggests.
we have a nice sort of friendly like uncle to help you out, or like Colin the know-it-all,
Yeah,
and
Colin.
that's like the spectrum of names that we're I like that. And I think now that we've answered the very important questions of what we would call AI, that is where we're going to wrap up today's Fintech Insider news. So thank you so much to today's guests. Where can people find out a little bit more about yourself and your companies? Coming to you first, Ian.
So either on the Tink website, where you can just Google Tink and we will pop up, or obviously I'm on LinkedIn. So happy to chat to anybody.
Brilliant. Thank you. Who is that?
Yeah, I'm usually on Twitter or X now at WeezaJ, also on LinkedIn at WeezaJ, and also on Instagram at Africa Fintech Guy.
Ah, great. Good handle. And Tim?
So obviously, I want to have zero CAC. So if you want to sign up at yonder.com, if you're based in the UK. If not, you can also reach me on LinkedIn, Tim Chong.
Fantastic. Thank you. As for me, you can find me, Laura Watkins, on LinkedIn or otherwise 11fs.com or all things Fintech Insider. Thank you so much for listening to today's Fintech Insider. If you like what you've heard, please make sure to follow us on your favorite podcast platform of choice. And if you really like what you've heard, why not share the podcast around with a colleague or friend? We really appreciate that. And as always, if you want to join the conversation, find us on social media. Just search for 11FS or Fintech Insider and we will pop up on almost all platforms. Or drop myself and the team a line at podcast@11fs.com. Thanks again and goodbye.
In today's fast-changing digital world, proving your company is trustworthy isn't just important for growth, it's essential. And that's why Vanta is here. Vanta helps companies of all sizes get compliant fast and stay that way with industry-leading AI, automation, and continuous monitoring. So whether you're a startup tackling your first SOC 2 or ISO 27001 or an enterprise manager vendor risk, Vanta's trust management platform makes it quicker, easier, and more scalable. Vanta also helps you complete security questionnaires up to 5 times faster so you can win bigger deals sooner. The results? According to a recent IDC study, Vanta customers slash over $500,000 a year in costs and are 3 times more productive. Establishing trust isn't optional. Vanta makes it automatic. Visit vanta.com/insider to sign up for a free demo today. That's VANTA.com/insider.